Now, Brandy, let's shift into our next topic. We wanted to answer the top Googled questions about real estate in 2022. Unfortunately, this is going to bring us back down the path that we've been talking about for months, which explains why these are our most popular videos.
Yeah.
5 most Googled questions about real estate 2022. Let's go. Is the housing market going to crash?
I don't know. Laugh at this every single time because.
You know what? My crystal ball, I left it at home today. We can't. I mean, we don't know, guys. Listen, all we know is that the market has been declining because the interest rates have gone up. We don't know if this is going to be. We're going to see. Some people predicting the interest rates might come back down in January 2023 to middle of 2023, like early to mid. We don't know how true that is. It's all just hearsay. All we really know is what's happening in the market right now.
Exactly. But look, there's so many factors that weigh in. There's immigration. There was stress tests. There was people who went to B lenders. There is, the rates have fluctuated over history forever in real estate, and all we know statistically, it's always gone up. So will it level out or dip a bit? Probably as the market starts to slow down, but listings are still up, and I think that it will go back up eventually. It's going to become a really good time to buy.
Yeah, and I mean the average price is still up from last year at the point of making this video by 13%. We're June 15th right now, but that's how far we film our videos in advance, by the way. I think that with it crashing, I don't know. If it goes down, it'll always come back up, like you said. So is it going to crash? Who knows? It may. You mentioned the stress test. The banks over the last few years have put that in so we don't have an issue like in 2008.
Yeah.
We've kind of been making, already pre-qualifying people at these 5% interest rates.
Exactly.
So we shouldn't expect to see people have issues paying for their house. And there's also options when they go to refinance. If you can't afford it, you just extend your amortization out, stuff like that, right?
And in the past, we're not mortgage advisors, but in the past, a lot would always recommend go variable because it's still not at the catch-up rate. But I think it's just a good time to maybe start considering a fixed if you can't afford those a few $100 fluctuation gaps.
Yeah, if you want to know what your monthly payment is.
Yeah.
Although right now, at the time of this, I'd probably go variable still.
Still.
Because 2.7 variable versus 4.4 fixed. It would take a lot of quarter-point hikes to catch up.
For sure, but there's some people who can't afford.
Yeah, some people, they want to know what their monthly is, especially if it's an investment property too. You kind of want to have your set things. When will the housing market crash? This is question number 2. When will it? I don't know. Why do you guys Google this stuff?
Yeah,
When will it crash? Like, is somebody out there that's going to say, like, from the government, okay, this is the day.
Yeah.
This is the day it's crashing.
Yeah. When should I buy? When should I sell? Yeah.
We don't know when it's going to crash. No idea. All we know is that if it does, it'll come back up. That's what we've seen throughout history in Canada. Why is the housing market so high right now? So that's something that's been happening over the last few years. It really started back just, I guess, around 2015 was when we first started to see it. We started to see historically low interest rates. We saw a wave of immigration, and that really spiked things forward. Then it started to taper off a bit in 2018.
Yeah.
2019 as well. It was a very even market, and then COVID hit.
Yeah.
And then we started to see lower interest rates, which really drove buying. A lot of people started to appreciate home ownership because, I guess, traveling stopped, that sort of thing.
Sure.
So there was a huge wave of people looking for properties.
Yeah.
And as things went up, investors started to see, holy, look at these gains. So then you start to see investors jump in. Like in 2021, the largest group of home purchasers in Canada was investors, and that's just under 25%. So almost 1 out of every 4 purchaser in 2021 was purchasing a second or more property.
Yeah.
So that's partially why the market's so high. Yeah. But we're starting to see the prices come down. That's because the interest rates have gone up, so affordability has gone down. And I don't know where the bottom is. I mean, we don't know. Yeah. But I mean, it is what it is, right? Like we talked about it, watch our video from 2 weeks ago. We kind of talked about finding the balance there. Is the housing market slowing down? Just talked about that. Yeah, it is.
Yeah.
It is.
I mentioned previously, right now we're sitting at about double listings to solds. So there's more out there for people to look at.
And we're even seeing, I actually texted it to my clients, was it yesterday? We had, we had just as many price reductions as we did, I'm probably not going to be able to find the number in time, but we had just as many price reductions as we did sold properties yesterday. That just shows like how much,
Yeah.
you know, for every property selling, there's 2 getting listed and 1 reducing their price.
Yeah.
Crazy.
And we can search the days on market as well, and they've gone up a lot.
Yeah, it's very rare to see things sell quickly in a week now.
Yeah.
When will the housing market get better? So this question, I don't know if they mean get better in terms of affordability or get better in terms of things leveling out. I guess you can take that question as things getting better when things will be kind of even, right? When we get to that balanced market. Right. Go ahead.
Okay. I think, the Bank of Canada, they have their kind of idea. They literally just want to level out how fast inflation is growing. And they said they're going to keep hiking rates well into 2023. So that's their plan. So that's going to at least be another year or so. But
yeah, it could be like their goal target of inflation is like 2%, and I think last month when we looked at the stats, it was like 6% or something. Yeah. So they're trying to raise it to bring it down.
Yeah.
But I mean, there's also other factors too, like the war and all that stuff, right? Gas prices, holy. But yeah, I think that we are still in a seller's market in terms of like historically what defines a seller's market. When we look at our months of inventory. If you're curious about that, we talk about it in almost every video we do.
Yeah.
But the months of inventory, until we hit a certain point, we are still technically in a seller's market. Like things are still going in 30 to 60 days.
Yeah.
Average, well, we say that, but average days on market's 14. I'll be curious to see what this month's average is though, because it's got to be way higher than that.
Yeah.
But with the average days on market climbing, it's going to shift into a more balanced market. And as we have more inventory sitting on there and there's more options for buyers, we're going to get that balance. Like I remember I mentioned it before on the podcast, back before all this craziness, we used to have a house and be like, okay, your average days on market in the area is 63 days or 80 days. So be prepared to sit there.
Yeah.
You know, we'd be looking at houses that were on the market for 5 months before they sold.
That's crazy.
It just comes down to the right buyer again,
yeah,
right?
For sure.
And the marketing. So
patience.
Yeah. So when will it get better? I don't know. I got no clue. Will it get better? I hope so. I mean, I hope we get that balance. It's right now all over the place.
Yeah.
Right?
Yeah. Exactly.
But that's why these questions are Googled so often. Everybody's just looking for that answer. I don't know if you're looking because you're trying to time the market or you're just curious about it, which I heard, and I'm going to say for Steve Ackerman on our team, this quote's for him. I said it, and he made fun of me because I heard it for the first time like a year ago. Was that time in the market is better than trying to time the market, which I guess is a big investor quote.
Yeah.
I don't know, I never heard of it, but I thought it was good, but he made fun of me. But basically the purpose is if you try to time it, it's really hard to time it and win. Historically, what we've seen is that prices in Canada have doubled every 10 years. So the market does always increase over the long run. So based on that, historically, it just shows that the longer you're in the market, the better. Real estate is no longer going to be this investment tool where you buy it, you sell it 6 months later for $100K and buy another one and do it again. That's not going to happen anymore. Real estate's going back to the way it was earlier, like early 2000s, when you bought it and you increased maybe 15-20% over 5 years or something, right? Maybe 10, but nothing like that. Nothing like what we've been seeing in the last few years. The quick money in real estate is gone.
Yeah.
You got to look at it now as more of a long-term investment.
Yeah, and I think live in your means as well.
Mm-hmm.
Right?
Yeah, for sure. No expansion on that?
I don't know. I was just thinking before, like when people were paying $100,000, $200,000 over asking, who knows what's going to happen to those people when the rates go up and you went variable. So just buy a house within your means at this point.
That's it. Yeah. Start considering that fixed rate if you need to.
Yeah.
Anyways, thank you so much for joining us. If you do have other questions that I guess weren't the top Googled questions, but you want us to answer them, we'd be more than happy to drop it in the comments below.
Take it down.